Oh man, so this is an emergency video brought to you earlier than normal because this is D-Day for crypto. The markets are yet to open at the time I'm recording this video, but we've got Bitcoin up 3.5%, allowing Fantom to be up 4.4%. Bitcoin breaking from a key pattern, which I shared with you yesterday. Is this all a little too early? Is this a fake out? And is Jerome Powell going to crash this markets later? That is what we need to digest. That is what we need to understand. I'll be coming with you guys later in another video to digest exactly what Jerome Powell said and what impact that's going to have on the market. But this really is D-Day. This is not the time to be looking at Fibonacci patterns or certain on-chain metrics or fractal patterns. This is the moment to look at what is driving the wider macroeconomy, what is driving sentiment between risk on and risk off. And today is a critical day in doing so. It's the FOMC meeting, 2 p.m. Eastern time. We receive the statement. 2:30 p.m. we will see the press conference from Jerome Powell. And I'm going to break down in this video exactly what we're looking for and what can move this market either way. So sit back, hit up the like button. Don't forget to subscribe. As always, these videos are brought to you by our very own course member live stream. So if you want to access 3 times weekly live streams, well, you can ask me questions on your portfolio, tokenomics, do TA on some of your favorite coins, and talk about macroeconomics, psychology of trading, and much more. Then consider joining ijaz.uk/member. Right, let's get straight into the Bitcoin chart because this breakout looks lovely. This is a really nice breakout we're seeing here on the charts. But the question we need to ask ourselves is this a little bit premature? What is going on? What is allowing Bitcoin to break out from this wedge, which we've been monitoring? We know the price target of the breakout from this wedge can be as high as 42,500, which will get us well on our way to recovering from this dip. More importantly, it would avert the potential negative side of falling to the downside of this wedge down to 33,000 on the technical target on the downside of this wedge. Now, what is going on? Why are we seeing this? And you can see this across in the stock market as well. If we look at the pre-market, you've got the Dow Jones green, slight green on the S&P, and slight green on the Nasdaq. Now, I wouldn't get too carried away with this. Okay, we've still got approximately another 5 or so hours before we get the statement from the FOMC, and this could just be a little bit of a run-up before panic sets in based on what Jerome Powell says. Whenever you have a binary decision like this, you're playing Russian roulette if you're trying to trade going into it. Please be aware of doing that. If that's what you want to do, go for it. But as a long-term investor, you just want to sit back, digest the news, and then play information based on the cards that have been dealt. That's what longer term investors, that's what I want to do. So I want to see what happens and then react accordingly. So part of what you're seeing here today, and I just want to mention this dip to the downside is quite strong. We created a higher low from here. We didn't have to go all the way back down to 37 before coming back up to the top of the wedge. So this was nice. Bulls came in nice and early. And I think the other element we're seeing is shorts are offloading. There were a lot of people who were short Bitcoin, but rightly so. It would be stupid to go into FOMC meeting with a bunch of shorts loaded, particularly when Jerome Powell could stimulate or do something which could lead to a nice big rally here on Bitcoin. Okay, so we're seeing a lot of shorts offloading as well. If we take a look at Fantom, reacting even stronger than the market today. We're up 4.3%. And again, just showing that people are getting ready to buy the dip. We're here at 78 cents on Fantom. But again, it doesn't matter. We're just waiting on direction. It's good to see volume is here because that means if we do get a good catalyst to the upside, the volume is sitting there on exchanges and people are ready to buy this dip if we get good news. And I can quickly see us getting back to 96 and then back up to our channel at 105 with some good sentiment and with Bitcoin starting to roar towards its price target of 42.5, which we just shared at about this level here. Okay, let's take a look at fear and greed index. And you can see fear and greed index is sitting at 21, which is extreme fear. That was probably based on more of the reading from yesterday when we were heading to the downside. I think that's when the reading was taken. If you were to take another reading now, it'd probably be a little bit higher given the number of green candles we've had here on the 4-hourly chart. So that's good. Now, let's get back down to what is expected from the FOMC meeting. We've covered this off a good few times here on this channel, but just to make sure we're super clear, the market has priced in 50 basis points interest rate hike. Okay, so if I head on over to this, which is the Fed rate monitor tool, virtually 100% of the market is priced in a double rate hike. So a double rate hike on and of its own is not going to spook the market. If anything, it can be slightly red / sideways. If we get less than a double rate hike, which I'm not expecting, by the way, but if Jerome positively wants to give us like a really late Christmas present or something, and he wants to do a 25 basis point hike, the market will rally straight away. It's priced in 0.5%, so a 0.25 will allow the market to rally. If we see something more hawkish, so 0.75%, then the market will go very red and red quickly. Okay, so we need to be cognizant of that. Now, these aren't the only permutations, because the most likely scenario is we see a double rate hike of 0.5%. But on top of that, the market's going to be listening closely to the press conference. And if in the press conference, Jerome Powell says things which are hawkish, i.e. he says we still have a very strong labor market, earnings growth are still really strong, consumer demand is still there, then those hawkish tonalities, or if he says we're going to, hike more quickly, we want to front load interest rate hikes, then that's going to give the market a little bit of the shivers. Now, longer term, what is my vision on this? My vision on this is I'm not too bothered at all, to be completely honest. Because the reality is, we know that the Fed want to get us to an interest rate level of 2.2 to 2.5%, okay, within this year, 2022. So we know we're on a path to do that. How he chooses to do that is all semantics. At the end of the day, we got to get there. And the reality is, we're still in an accommodative state right now. Getting to 2 to 2.5% is actually a neutral point of view. And then when interest rates are higher than that, then we're in a bit more of a tightening situation. So I'm not too concerned by those, okay? So it's just longer term, it's not an issue. But yes, in the short term, you have traders, you have risk and risk on, appetite moving. So markets do move based on what Jerome Powell says. Now, the other thing which is not being spoken about is the quantitative tightening. Remember, the market is now saying, okay, maybe he's going to do a $95 billion hoovering up of money from the economy each month. So the extent to which he does that and how quickly and aggressively he does that can also affect markets. So listen out to anything in the conference that suggests that too. So based on that then, once we get the data in 5 hours from now, we could either be setting ourselves up for a nice rally to the upside, which for Bitcoin we know will get us back towards 42.5, and then we really need to get back to the top of our wedge. If I head on over to the daily chart and tidy this up a little bit, just about here, which is 44.5 at the neckline, where we broke down into this negative trend down here. Okay, so that's what we're looking for on Bitcoin to the upside. If we get negative risk, then straight away back again, the 33 price target comes into play. And I don't mean immediately, not necessarily immediately, but it just means over the next couple of weeks, the market could be taking more time to digest this, and we could see stocks and equities continue to fall, and therefore risk off for Bitcoin as well. And that would mean same for some of our favorite coins like Fantom. Okay, so with Fantom, for example, if we can get the green light to go ahead and Bitcoin plays out its bullish scenario, we quickly want to recover 96 cents. Very important that we recover that. It's a very important level of support. And it just took that perfect negative cocktail of mess, which drove Fantom through that 96 cents last week. But if we can recover that, it'll be an area of strength for Fantom before then working its way back to 105 and then onwards on Fantom. The negative situation, we know that the negative situation is for us to still continue to fall lower top price points, right? We've got 68 cents where we, 68 cents where we managed to get some support coming in. And then can we then see if we need to get some support from 58 thereafter? So those are two levels I'm focused on. Yes, some people can scare you and give you crazy price targets by taking a Fibonacci extension. I know some of you guys shared a technical analysis video of Fantom from a particular influencer who used a bunch of Fibonacci extensions, who showed you that this is a double top pattern, which yes it is, and you could derive 15-cent price targets here. I think in that video derived a 2-cent price target for Fantom, but in the whole video he had no comprehension or mention of the macroeconomics, right? He didn't mention what was going on. It was clearly an influencer who was very trading heavy, very technical analysis heavy, and the reality is if you don't know what's going on in the market, if you're not cognizant of what we just spent the last 5-6 minutes talking about, then you're going to be walking into some crazy trades where you're going to get liquidated, you're going to get wrecked because you don't know the wider dynamics of the market. And that is why on this channel, we'll take the time to talk about the technicals. We'll talk about the fundamentals, and we'll try to wrap that up so we're making informed decisions to invest in crypto sustainably. So there you go, guys. Hopefully that arms you with the knowledge that you're going to need for the next 5 to 6 hours until we get the FOMC meeting announcement and the press conference from Jerome Powell. As always, if you appreciate these videos, smash up the like and subscribe. As always, if you like my perspective, check out the links below for joining our course member live streams, ijaz.uk/member. And let's take your investing to the next level. I'm going to see you in 5 hours for an update on what's happened. I may even live stream, but don't hold me to that. If I do, I'll let you guys know in the Discord and also obviously put it on the YouTube channel as well. As always, thanks for watching. We'll see you in the next one.